As the real estate market changes, as Blackstone tells us, there is going to be a generational opportunity to make money. One of the things you as a real estate investor must do is, what tools do I have at my disposal? And one of those tools you must have is what we call the 50-40-10, aka the 90% CLTV loan. But did you know you can not only use this for purchase, but perhaps cash out refi? We're going to have this discussion with the one and only Stephen Dow from Velocity Mortgage. How you doing, buddy?
I'm doing fantastic. And yourself?
I'm doing well. Do that marketing spiel so we can get into the fun.
You got it. Although I work very happily for Velocity Mortgage Capital, all the ideas and topics discussed on this channel, that of my own. So let's get another one going.
There you go. So we've talked about the 50-40-10 for a couple of years now. It was
Mhm.
always a tool, but I believe it is going to become the tool for people who are really doing the work, especially in the multifamily or commercial space. Let's break
Right.
down what makes the 50-40-10 so powerful. First
Yes.
off,
Well, basically, the ideal loan setup that you and I have been discussing with that 50-40-10, whereas we would provide the 50% LTV first mortgage, the
mhm,
seller would carry up to a 40% second, and that would allow the buyer to put down a minimum of 10%. So I say ideally is because at 50% LTV and under, that would allow me to offer my lowest rates. And
of
then
course,
usually with that kind of a split, if the seller financing is structured, somewhat conservatively, and the seller understands the big picture that, hey, if we give you your price, you need to give the buyer the terms so it makes sense for them to want to invest in the property. But also, if you can set up to where a lot of times the property can cash flow from day one with only putting 10% down, now the seller in second position is less likely not to get paid because
yeah,
it cash flows. You know what I mean?
yeah,
Win-win, everybody. Win-win or chicken dinner. So seller gets their price, gets to sell now. No more pain, no more property taxes, no more homeowners insurance, right? No more mortgage. Buyer gets a property cash flows from day one. Everybody's a winner. So
yeah. So let me tell
it's
you why
starting to
this
really
is
take
so.
off.
Let me tell you why this is so powerful, and you've got to be
Yeah.
able to pitch this to a seller. So
Right.
these are all the things that I would talk about. You choose the order you want to do them in.
Hmm.
50-40-10. First off, you're going to tell the seller that you can give them their price. You're going to pay more than anybody else. Mr.
Right.
Seller, I'm going to pay more than anybody else. Second, Mr. Seller, who's probably owned this property for a while, I'm a long-term cash flow investor. So I need to, no, I have to orchestrate
Right.
this deal so it cash flows day one. You understand,
Right.
right? Of course you do. Last, I'm going to come in with 10% down. How many loans could you do today as an investor with 10% down? None. You need 25, you need 30, you need 35%. But it's better
Right.
than that. Think
Right.
about the seller. Not
Hmm.
only do they get their price, but folks, they get 60% of the cash day
Right.
one.
Right.
They're taking back 40%, which
Right.
again will likely be below market rate because that's just part of
Right.
the deal, but that's
Yep.
still income. It still
Yep.
allows them to cover shield that 40% you're not paying taxes on, right? It's
Right.
called an installment loan, right?
Right.
Talk to a CPA to learn that. But
Right.
remove the headache. So again, pay more, get a bunch of cash, get some income month to month. You're a
Yep.
secured, like your point about being a secured second is awesome. Most
Yeah.
people don't want to be second because they're
Right.
afraid they're gonna not be paid.
Correct.
But hey, I got a second at 1%. It's going to allow me to
Right.
have a blended interest rate at 6.5. I'm good.
Right.
It's awesome.
Right. At 90% leverage. Yeah. Or
Yeah.
up to it. So
Just
So let's
wild.
talk about the deal that I have that's going right now, where we applied that 90% CLTV, but on a refinance.
Oh,
So usually,
no. Time out,
yes,
time out, time out.
yes, yes,
So we've only talked about the 50-40-10 as a purchase.
right,
What you're telling me is, in theory, if you have the
yes,
right opportunity, you could do a
correct,
cash out refi with a
right,
50-40-10.
yes. So basically, what had happened is a long-term client came back to me wanting to refinance, but the way that I explained to him what we could do, he finally explained that to the current lien holder because it was seller financing, who's currently in first position. But he had agreed to now subordinate behind our new first loan. So then
Okay.
now my first loan, the new first loan is at 50% LTV,
Okay.
but the seller lien that's on the property now, he agreed to subordinate behind my current new first for a maximum total combined loan to value of 90%. So he was able
So
to pull out cash out, yeah,
yeah.
without
So
touching it
okay.
first.
So there's a client of yours who did a
Hmm.
seller finance deal. Either they put a lot down or values have increased significantly. This
Right.
this owner now
Hmm.
wants to go back and pull cash out.
Right.
Typically in a situation with a bank, like if you had a
Right.
bank first, you'd be doing
Got to
home
pay off that
equity
first mortgage.
line.
Yep.
Well, you would have to go home equity or second,
That's true.
best case,
Right. Right.
right? And you're not going to go to 90%.
Correct.
And the interest rates are going to be bananas, probably 13 or 14%.
Maybe.
That's the environment, my
Right.
opinion.
Right.
What you're saying is because this was a seller financing deal, this
Yep.
owner went back to the lien holder and said, "Hey,
Yep.
I need to take some cash out. We've got a bunch of
Right.
equity.
Right.
I'm going to go get a loan with Velocity in this case,
Right.
but a requirement is you're going to have to go from first position, the most
Right.
secured,
Right.
to second position."
Correct.
And because the seller said he was okay with that for whatever reason, but they
Hmm.
are,
Hmm.
we can do a 50-40-10 cash out refi. So the owner pulled out 200 grand. The seller
Yep.
moved from first to second. Velocity jumped
Yep.
into first.
Yep. Because I think the terms on that seller financing were pretty good, so he didn't want to pay that off to pull
Of
cash
course.
out, right? And then I guess he'd been paying on time with this particular seller financing, and so I think he was pretty trusting in the bar. By the way, it's a bar from the One Rental at a Time channel. I don't want to give his
No, it's fine.
his or her name or whatnot, so
That's
you
fine.
would recognize it. But yeah, it worked out. And at first it's a long story. It got a little confusing halfway through, but I knew the conceptually how to structure it.
Yeah.
But yeah, just explaining and articulating it to every participant in the transaction was a little difficult. But now everybody's on the same page, and yeah, it all worked out. It all worked out.
I would argue, I don't want anybody to get crazy. I don't think
No,
this will happen a lot. I don't think
not a
there'll be
lot.
a lot of current first loans wanting to take a second, but it's
Right.
certainly possible. I mean, one of
Right.
the things that, like, again, I'm just playing this out, and I don't know if this happened this time, but it could happen the next time. Like, let's just say you do the first time you buy it, you're at, I don't know, 3%. That's what you agree
Right.
to. What
Right.
you could agree to get him to go to second is, you know what? I'll, again, I'm just playing with this. I'll give you 10 grand cash now, so we'll lower the
Right.
balance, and
I'm
I'll take
sure.
it 3% to 4%.
Yep. I'm sure
Right?
there was some sort of renegotiation
Yeah,
to make it worth the while for the
I'm
seller.
sure.
Because again, yeah, it had to, because he got like over 200 something thousand cash out. So I would imagine there was some sort of willing and dealing, but it made for the most optimal loan structure given the circumstances and what was allowed. Because again, I don't think any other lender would have been able to do this. He would have had to pay off that first.
No
Yeah.
chance.
And
No
so
chance.
and then the rate would have been higher, because now, you know what I'm saying? He'd have to have a higher LTV to cover what he was needing to pay off the current first. Actually, yeah, he wouldn't have that much of cash out, because I'm maxed at a certain LTV. So we pay off that, right? So yeah, it just, oh, man, I love it.
Yeah, the 50-40-10 is such a Swiss Army knife, such a tool that, again,
Agreed.
in an environment where, especially in commercial real estate, I don't know if you know this, but commercial real estate transactions are down 70%.
Oh, yeah.
70.
Mm-hmm.
So if you have a seller that's a willing seller who wants a price that's above current market, 50-40-10 is what I'd be using all day, every day.
All day. Just got to crunch the numbers to do the work. That's all it is. And give Uncle Steve a call. Let's crunch some numbers.
Yeah, what I would tell some folks, if you don't really get the 50-40-10, you need to reach out to Stephen Dow immediately. Just so you know, there's a playlist on this channel. It's called Deep Dive. I haven't added content to that in a little while, but there is a 50-40-10 deep dive that it would probably be wise for you to look at first. It's an hour long, as I recall.
Yes.
Take a look at that. Watch that first, because it is so powerful. It offers so many options.
Yep.
And again, this is what I'm going to say this right now, and I believe it. For the rest of 24 and 2025, the 50-40-10 will get more commercial deals done than bank financing. Why can I say that? 50-40-10 means I, the buyer, have to come in with 10%. Bank loans today, I talked to a lender in banks, and I own some of this stuff. They want 40% down today. They don't want to lend in commercial today. They want 40%. Velocity says 10. Second, sellers remember yesterday. They hate tomorrow, right? So what does that mean? They want yesterday's price. Well,
Right.
I can give them yesterday's price if they give me yesterday's interest rate.
Right. That's true. Good point.
This is it, right? And then go get
Yeah.
long-term financing, right? Go make it
Right. 30-year
years.
fixed money. That's what I'm
No,
saying.
I say that again. You're going to give me 30-year fixed rate money. I could get
On commercial.
30-year fixed rate money from the seller on commercial property. And folks, I know this
Yes.
because I have some. I have
I know.
Velocity loans, 30-year. We won't tell you the rate because it's bananas.
Yeah, we don't want to build. We don't want to rub salt into the wound again.
Yeah, I took action when the
PTSD.
time was good. Yeah.
Yes. Well,
Yes,
again,
but-
Mike, if you recall, I was like, "Hey, Mike, let's not talk about it anymore. Let's walk
Yeah,
the
let's
walk
go.
and let's show them that it's for real." And then once you were like, "That's for real, folks. It's for
Yeah,
real."
let's
Well, I just
let's
did
do
one,
some
so-
more.
Yes, sir.
Yeah, it's pretty crazy. So yeah, dude, I think the 50-40-10, it was always cool. It was always cool for me as a deal maker, right?
Right, right.
But now we're in the environment where the 50-40-10 is the tool.
It
Like,
is.
Sellers want high price. We want cash flow. We want low down payment. They want income. They want no headaches. I'm like, the 50-40-10 is the thing to do. It's going to be cool.
Well, the funny thing is that my company just put out a big like marketing email blast that specifically spoke about our feature.
Our
of,
baby.
Right, the 90% CLTV. So, but again, like you said, not only can you use it for residential, but the commercial space. So I'm getting a lot of interest from that again, because again, that allows for a lot of potential deals to happen. Where in this market right now, it's just either the rate environment or lending kind of restrictions or quantitative tightening. It's just not a good environment to be moving commercial properties in this environment. But I think with this tool, it's gonna at least open up some other options.
I'm going to call this the best loan structure for investors today. Lease down, best control of cash flow. You can pay the highest price, 30-year money.
Yep. Loan doesn't report to the credit bureau. I can go on.
50-40-10, call Stephen Dow or email Stephen Dow. How are we doing that?
Yes, sir. Again, just shoot me an email to SDAO@velocity, the word mortgage spelled out.com. In the subject line, please put the acronym ORAAT so you make it past the firewall. In the body of the email, maybe a brief description of what you're looking for. Address would be really helpful, at least city and state, to make sure I can lend there. Your mid-FICO score is also helpful. And then best phone number to reach you at, in typically 24, 48 hours. I'll be in touch.
Again, sdow@velocitymortgage.com. 5 letters, 5 letters only in the subject line, ORAAT. Let's get this going. Thank you, buddy.